Good afternoon, everyone. Welcome to the last breakout session of the day, Understanding the Paycheck Protection Program and Loan Forgiveness. Sounds exciting, I'm sure. We'll try to make it as exciting as possible. My name's TJ Casady, and I'm with you today live on location here from Union Bank and Trust Company here at 70th and Pioneers. Thanks for allowing me to be with LeadingAge Nebraska today. Before we get started, let me give you just a little bit of background on myself. I've had the pleasure of working here at Union Bank for over 25 years. I started right out of high school as a teller, and I just never left, fell in love with it. Union Bank has a wonderful culture, great employees, great owners. There's a lot of longevity here at the bank. And I'm thrilled to be a longtime team member here. I've worked in a lot of different areas at the bank over my career, but the last 6 years has arguably been the most fun. I spent the last 6 years in our commercial loan department, where I helped start an aircraft lending initiative. Now, over the course of the last 6 years, we've been able to make more than 600 aircraft loans all across the country, and we've built a portfolio of loans that now exceeds $160 million. Now, in addition to that, I also serve as the commercial lender here at Union Bank, who is the SBA, or Small Business Administration Specialist. So anytime we have a client that comes into any of our facilities that's in need of an SBA loan, I typically work with the client and help them through the process of qualifying, of understanding the guidelines, and ultimately closing the loan. SBA loans are a great tool for us as bankers. They allow us a guarantee from the government. It's a 75% guarantee. And so if a loan would go bad, we would liquidate the collateral, we would pay down the loan, and then the government would step in and pay us 75% of whatever is left. So it allows us to take a risk that we may not otherwise take. So for example, if we had a startup like a restaurant or a hotel, maybe it's an industry that has a higher risk of failure. We use SBA lending fairly heavily here at Union Bank. I would say we do between 24 and 36 SBA loans a year, and maybe somewhere around $30 million worth of loan volume each year in SBA loans. Well, we'll get into this in much more detail later, but let's talk about the Paycheck Protection Program. It was rolled out by our government in the March timeframe, and the Treasury leaned on the SBA to administer the program. And therefore, here at Union Bank, our SBA department, which is me, along with 3 loan assistants, really had to learn the ropes quickly. Now, to put it in perspective, I told you, we've originated 600 airplane loans in the past 6 years, totaling over $160 million. With the Paycheck Protection Program, we originated almost 3,000 loans, and most of them in less than 2 weeks. That totaled more than $350 million worth of loan volume. Well, here's what you can expect today from the program. I'm going to share the inner workings of the PPP and what to expect if you have a PPP loan. I'm going to explain how to apply for loan forgiveness and what long-term care providers need to understand about the forgiveness process. And hopefully, so we don't all fall asleep, I'm going to throw in a story or two. Finally, we'll talk about other Small Business Administration or SBA loan programs that are still available. So let's go ahead and get started. The Paycheck Protection Program. First off, what is it? It's a SBA loan designed to provide a direct incentive for small businesses to keep their workers employed during the COVID-19 pandemic. The amount of a PPP loan is equal to 2.5 times the applicant's average monthly payroll costs. And the loan is forgivable. So if the employer maintains its payroll, then the portion of the PPP loan used for covered payroll costs, interest on mortgage obligations, rent, and utilities during up to a 24-week covered period will be forgiven. So PPP was authorized under the CARES Act. It was a $2.2 trillion economic stimulus passed by Congress and signed into law by the President on March 27th of 2020. It was unprecedented in size and scope. The CARES Act is the largest economic stimulus package in U.S. history. A lot of money went to one-time cash payments to individual Americans. We all took advantage of that. We also had, as part of the CARES Act, increased unemployment benefits. There was $350 billion initially in funding for PPP. That was later increased, I believe, to $669 billion when we went through the second round of funding. Additionally, there was aid for large corporations and also state and local governments. I'll tell you that the demand for PPP was really unlike anything I've ever seen in my 25 years at the bank. The concern for us was we knew we had clients that were hurting. We knew that we had clients that were concerned about how the pandemic was going to affect their businesses. And we knew that this $350 billion worth of funding, well, that sounds like a lot, with every bank in the country, trying to use those dollars, we knew they were going to go fast. We worried a little bit that some of the larger banks might have a leg up because they likely have existing interfaces with the SBA and might be able to take advantage of those and fund loans quicker than we could. So we knew at Union Bank that we really had to be on top of this if we were going to take advantage of helping as many customers as we possibly could. And I'll tell you what, in the end, we helped a lot of people. So local impact, the state of Nebraska did a great job, and it wasn't just Union Bank. Many other local banks stepped up in a big way and helped clients out. You can see here for the state of Nebraska, total PPP loan volume was about $3.4 billion, about 42,000 loans made in the state of Nebraska. Again, at Union Bank, we had loan volume that exceeded $350 million and about 3,000 applications in total. Again, in a typical year, I think I said 30 million earlier, we might do between 50 and 30 million in loan volume and 24 to 36 transactions. So to do 3,000 transactions and $350 million was a huge, huge undertaking. Okay, let's talk about some important details here. First off, eligibility. An applicant must be a small business, a sole proprietor, a self-employed person, a 501c3 nonprofit, a veterans organization, or a tribal business. And the operation had to be in business February 15, 2020 to qualify. The applicant and its affiliates must also have had 500 or fewer employees worldwide, meet the SBA's industry size standards based on average number of employees, or have a tangible net worth that did not exceed 15 million and a net income that did not exceed 5 million. Applicants also had to certify in good faith that the current economic uncertainty made this loan request necessary to support the ongoing operations of the applicant. And that was kind of a tough one for a lot of our borrowers. When this first rolled out, you got to remember we were on the front end of this pandemic, and there was a lot of uncertainty. Businesses just didn't know at that point how this all would affect them. Obviously, there was a lot of concern that, with restaurants that, people weren't going to be eating out near as much, and hotels and other industries. I mean, there were many industries that had concern. Now, there were other industries that maybe hadn't been affected yet, but they worried about the long-term implications. And so, the SBA in the end did a pretty good job of reminding everyone that you signed this certification saying that the economic uncertainty made this loan necessary. And I think there was concern that some of the larger, more corporate type businesses might take advantage of this loan program and take these funds when they really didn't maybe need them. Here locally, I don't think that was the case. And I certainly don't think that people took advantage of the program. I think the people that needed the funds received the funds, which is what we want. Okay, so some more important details. Let's talk a little bit more about employee count and affiliation. Number of employees is determined by counting all paid employees, whether part-time or full-time or seasonal. Affiliation is generally determined based on ownership and management. So two entities are affiliates if one entity owns at least 50% of the other. Two entities are also affiliates of each other if one controls or has the power to control the other. All right, we'll talk about loan terms here. The PPP loans have an interest rate of 1%. They must have a maturity of at least 5 years. Now, for PPP loans made prior to June 5th, they actually had a maturity of 2 years. And then it was later bumped to 5 years. Every lender has the option to extend the maturity of these PPP loans longer if they so choose. All principal and interest payments on these loans are deferred to the date that loan forgiveness is remitted to the lender by the SBA. So there's no payments until the loan forgiveness occurs. If a business would not apply for loan forgiveness, then the business is not required to begin to pay principal and interest to the lender until 10 months plus the 24-week covered period. Every PPP loan is guaranteed by the U.S. Small Business Administration. There's no collateral necessary, and there's no personal guarantees required. In terms of the application process, applicants applied directly with a bank. The Small Business Administration had a standard application form. Banks were allowed to use their own forms or create an electronic form. And when the applicant completed the application form, they were required to attach supporting documentation. Those were things such as payroll records, payroll tax filings, the Form 941s, and in the case of a sole proprietor, their 2019 Schedule C from their personal tax return. Now, the deadline to apply for a PPP loan was initially June 30th, and then Congress extended it, did another round, and that expired on August 8th. So now we're on to the loan forgiveness process. And we're going to talk a little bit about the factors that affect loan forgiveness. There's really 3 factors. Number 1, payroll costs. Number 2, mortgage interest, rent, lease, and utility payments. And number 3, did the business maintain or rehire its employees and maintain wages and hours of its employees? So let's start with payroll costs. At least 60% of the loan has to be used for payroll costs. 40% can be used for mortgage interest, rent, lease, and utility costs. Now, PPP loan forgiveness is generally based on what the loan proceeds were spent on again. So to what extent did the business maintain or rehire its employees, and to what extent it maintained the wages and hours of its employees? Okay, so just to recap here, a small business secures a loan from a bank. The loan's based on their average monthly payroll times 2.5%. If the loan proceeds then are spent during up to a 24-week covered period after loan disbursement, and those funds are spent on payroll, mortgage interest, rent, and utility payments, then the entire loan can be forgiven. Now, the covered period, that 24-week period, starts on the day that you received your loan proceeds. Now, there is an option for an alternative covered period, and it's really more of an administrative convenience to allow you to begin your 24-week or 168-day period on the first day of your first payroll period following your PPP loan disbursement date. So let me give you an example. Let's say you received your PPP loan proceeds on Monday, April 20th. And the first day of your pay period following that is Sunday, April 26th. You could use the alternative payroll covered period starting on April 26th rather than the April 20th standard covered period. And so it just gives you a way to kind of line up your payroll period with this 24-week period. We suggest that you review both options to determine which one is more beneficial for your situation. Well, let's talk about what qualifies as payroll costs. Really pretty simple here. Salary, wages, commissions, cash tips, payment for vacation, parental, family, medical, or sick leave, payment for the provision of employee benefits consisting of group health care coverage, including insurance premiums and retirement, payment of state and local taxes assessed on compensation of employees. There is a payroll cost cap. The SBA caps this at $100,000 per employee. So for the purposes of calculating forgiveness, think of the limit for a 24-week covered period to be $46,154 per employee. Now, in the beginning, if you got your PPP loan before June 5th, there was an 8-week covered period that could be used. Some people are using that 8-week period, but I would say the majority of people are probably leaning towards the 24-week period just because it gives them more time to use those funds for payroll, mortgage interest, utilities. They want to make sure that they get the most forgiveness that they can. And I think the 24-week gives you a better opportunity to do that than the 8-week. Now, payroll costs also include the employer's cost for health insurance benefits, retirement benefits, and neither of those are counted against the $46,154 limit per employee. So those are in addition to that. All right, let's talk about what does not qualify as payroll. The compensation of any employee whose residence is outside of the United States. It does not include federal employment taxes, including the employees' and employers' share of FICA, and income taxes required to be withheld from employees. All right, we'll take a little break here. And before we get into the details of loan forgiveness and what that application process looks like, I'm going to stop and tell you a few stories. These pictures that you're looking at are real pictures from employees here at Union Bank who were working at home during this timeline. This all started in March. We had been home working remotely for at least 2 or 3 weeks. It was kind of a big deal to move all of the systems, think of all that a bank has to do, and we did it all from home, and it worked pretty seamlessly. So we had been at home for 2 or 3 weeks, and we knew that there were some press releases that have been released around emergency economic impact direct lending that the SBA was going to do in response to the COVID pandemic. And so we've been really watching that. trying to understand how we could best help our customers. Typically in the past, when the SBA does these types of emergency direct lending initiatives, it's happened in the past for things like flooding, hailstorms, etc. Usually those initiatives are led by the SBA, and they're direct loans that the SBA administers from application through closing. So, our borrowers have no interaction really with the bank. They go directly to the SBA's website. They make application with the SBA, and the SBA funds those loans directly with the client. Well, this time around, things looked a little bit different. We had been following the legislation that was being proposed in Congress, and in particular, the U.S. Senate Committee on Small Business, which was led by Senator Marco Rubio out of Florida. He had drafted a proposal which was called Keeping Workers Paid and Employed Act. And within that act, we noticed that what he was proposing was for banks to originate regular SBA 7A loans where clients would come straight to the bank and work with the bank to get the money, which again was a big change from how these disaster loans had been implemented in the past. So that really got my attention. And as a bank, we started talking about, what does this mean for us? If we have to originate these loans, and it's not just us referring clients to the SBA, how are we going to do that? Now, I mentioned I serve as the SBA 7A lending expert for the bank. And so anytime we have a small business that's a startup or is a high-risk industry, we typically look at an SBA loan to see if it would be a good fit for them. We're not a big department. Like I said, we don't do high volumes of SBA loans from year to year. We maybe have, I'm just using round numbers here, let's say we have 30 to 50 commercial lenders at all of our facilities bank-wide, and we have one person, myself, that handles the SBA needs bank-wide. We're a preferred lender with the SBA, which is a good thing. It allows us to underwrite these loans internally. We don't have to send a loan application into the SBA to get their approval. That really speeds the turn times, and it allows us to get money into the hands of our clients much quicker, much less red tape. So we started working with our Omaha regional SBA office to ask them questions, to find out, how is this going to work? And what was interesting was the Omaha regional office, they really hadn't heard anything at this point. They were following the legislation just like we were, but there was no official word that had come down from SBA at that point. One of the concerns we had was that with all these SBA loans, we enter into their system. Anytime we have an SBA loan, we have to enter the data into their system, which is called E-Tran. E-Tran's been around for years and years. It hasn't changed at all. It's an old system. Most banks only have a couple people signed up to use E-Tran. If you want to add another user, it's a 2-day process. And with SBA, everyone is centralized in different locations. There's an office in San Francisco, I believe, and another major office. I can't recall where they're at. But these systems that they have in place are antiquated, and you never are dealing with a person. You're dealing with an email group, and you don't know who the person is behind the email. So it's servicing@sba.com or .gov. So one of the biggest concerns we had was, if we have super high demand for this, we need to have more people signed up to use eTran so that we can input all this data into SBA's system and be able to generate the SBA loan authorization. And I worried, how would we get this done? So we started working with the Omaha office, and they didn't want to give us answers. They didn't have answers to give, and they were so inundated with phone calls, and they kept passing us off to, the other regional offices, and we weren't getting any service. We couldn't get more users signed up. And I think all banks were in the same boat in that regard. It made it incredibly frustrating. At one point, the thought occurred to us that maybe we need to get some help from Capitol Hill. Maybe we needed to make some phone calls and see what could be done. And so Union Bank and Nelnet is owned by the same family, founded by the same family. And Nelnet has some folks that do some lobbying work on its behalf. That are headquartered there in Washington, D.C. And so our bank president, Angie Muehlheisen, gave me a telephone number of a lobbyist that Nelnet works for, and asked me to give her a call and see if there was anything that could be done there. So I called her. She answered the phone, was very cordial and nice to me. I explained the situation we were in, that we've been trying to sign up another 12 users. We've had absolutely zero success. I think this is going to be a nightmare for all banks, because I don't think any bank's prepared for what's coming. And if SBA can't sign up users quick enough, we're going to have a real problem on our hands. She agreed with me, and she started making phone calls throughout her network there in Washington. And she was able to get a hold of a high-ranking SBA official there in Washington, D.C., who gave her his personal cell phone number. And so she passed that on to me, and I called the gentleman. He answered. He was very, apologetic. He said, we're just not quite prepared for this. We're trying to do the best job we can. I know the person that can help you. She's in charge of what's called the Capital Access Financial System, CAFS. That's the kind of the mothership for the eTran system. And I will give you her cell phone number. Please call her. She'll get back to you if she doesn't answer, but she's the person, and her team can get your users set up. So I called this person. It was about 8:30 at night, and she answered the phone, and she was at home. And I could hear her husband in the background. They were watching the news. They were curious to find out how much of the $350 billion in funding had gone out the door that day. She asked me to be patient while she logged on to her PC, and she said, I can get these users set up for you. So it took about 45 minutes, and she got those users set up. I had a colleague of mine join the call just to make sure that we got it all done. And by the end of the call, we now had 12 users. And so that's really when the fun began for us. It was March 27th. The House passed and the President signed the CARES Act. And guess what? The Rubio legislation was in there. So we're going to start making SBA loans. By late Monday, March 30th, the Treasury Secretary announced that PPP loans will be available on Friday. So they gave us about 5 business days to get ready. At that point in time, what the Treasury Secretary said is that the program will be a 4% loan, 100% government guarantee, and it will be a 10-year loan. The very next day, on Tuesday at 3 o'clock, the Treasury rolls out the PPP application form. And they send that along with some information sheets out to banks, along with some FAQs. At that point, they changed the interest rate from 1 to 0.5%, and they changed the maturity from 10 years to 2 years. The very next day, the rate changed again to 1%. On Wednesday, April 1st, Union Bank made the decision. We didn't have a lot of information at this point. We didn't know for sure if we were supposed to use the SBA's note or if we could use our own loan forms. We couldn't get answers from the SBA. They didn't know either. The guidance that was released was very vague. And so you had a lot of banks that were just kind of playing the sidelines. They didn't want to make an error and make a loan that wouldn't ultimately be guaranteed by the government. But at the same time, we had clients that were calling us and emailing us, and they wanted to get in line for these dollars. They worried that the funding would dry up quickly. So I remember having, and again, we're at home. I'll show you a picture of me here. We're at home. I'm in my laundry room office. I had been there for a long time. Apparently, I grew a beard. But in our home offices, we're having these conference calls at all hours of the night. Pretty atypical for bankers. I remember having a conference call, Angie Muehlheisen, our bank president, myself, and a whole team of other people were we were trying to understand, do we jump in now with both feet and make these applications available to our clients and start making these loans, or do we wait? And it was kind of like standing off the edge of a cliff, getting ready to jump down into the water. It was a bit scary. And the bank really leaned pretty hard on my background with SBA loans and wanted me to make the decision on, do we do it now or do we wait? And in the end, I think we decided, we've got to do what's best for the client. And the client, these small businesses, they're the lifeblood of our bank, the lifeblood of our communities. We need to help them out. So we decided at that point in time to make the application form available on our website. And so that evening, April 1st, we rolled out the application form, made it available on our website, and all night clients filled out these forms and started submitting them. They came in way faster than we ever thought they would. We actually had a team of people that stayed up all night that processed these applications. And what we did is applications came in, they would come in, some of them would be handwritten, some of them would be typed in, but we would take the data from those forms and input them into an electronic queue. The idea being then that we could take that data electronically and dump it into the E-Tran system. So we worked all night. Thursday morning, we had over 400 applications that had already been submitted. Now, Thursday evening at 7 p.m., the SBA issued an interim final rule, and it was released by the Treasury and the SBA, and it announced that they had rolled out a new PPP application form, completely different from the application form that we just had 400 people fill out. So that was a little bit frustrating. It was very challenging to know, okay, do we need to have everybody recomplete these forms? And if so, what a nightmare that's going to be. We had to make a lot of calls on the fly. And in the end, it was a good thing that we had all the data collected electronically. That helped us a lot. And, the SBA was just swamped. They did the best job they could. They didn't have the resources, just like we don't have the resources at the bank trained on SBA to handle this type of volume. The SBA just didn't have enough staff to be able to handle it. Now, eventually, we did get those 12 users set up for E-Tran, and we had our IT department get involved, and they developed a script that would take the data electronically and dump it into E-Tran. So we had 12 different interfaces that could be constantly dumping applications into E-Tran, generating SBA authorizations very, very quickly. That led to some incredible results. We got a phone call the Monday morning after we had taken applications, Thursday, Friday, and all weekend. We got a call from Leon Mylabar, who is the district director for the Nebraska District of U.S. Small Business Administration. And he said, TJ, I've got some really exciting news. Union Bank and Trust Company has processed the second most PPP loans in the nation at this point. And he said, the president's office has called our regional office wanting to understand how we did it and how other banks, can leverage the system and do better. It was incredible. And in the end, it led to some really great press for Union Bank and Trust. We were interviewed by 1011, KETV, Time Magazine reached out to do an article, and we were on the front page of the Washington Post. And these pictures here are from that publication. Really a special, way to be recognized. We even got invited to be interviewed on Fox News on a live program, but we declined that offer. So in the end, we had clients that would just log into our website. We had a portal set up where they would electronically complete their application. They could upload their documentation, and then we had these bots working in the background that would dump all the data into eTran, generate the SBA approval, and then the loan documents were then generated using automation as well. So we took the data that we already had and used an automated script to complete the loan documents. So we had very little, manual input. Then the documents were emailed to clients using a DocuSign envelope, and they were e-signed and returned. And then the funds were either ACH'd or wired directly to borrowers' bank accounts. So a very seamless system in the end. And we leaned on so many different areas to make it happen, including marketing, IT, commercial lending, consumer lending, small business lending, customer service, treasury management, loan operations, and the list probably goes on. Very proud to be a part of the Union Bank team that was willing to step up while they're working home remotely, work crazy hours, and be a part of something that was bigger than themselves in the end. So the next challenge is we've got 3,000 PPP loan applications. They all need to get forgiven. We've received about 400 completed forgiveness applications, and we've begun submitting those to the SBA at this point. So that's really the focus of the next half of my presentation. Is we'll talk a little bit about the forgiveness application process. Once a business has used the funds to cover payroll costs, rent, interest, and utilities over either the 8 or 24-week period, then they can complete the SBA loan forgiveness application. There's two applications. One is an easy form and one is a long form, and it just depends on their situation which one they have to complete, and we'll get into that more. The business completes the PPP loan forgiveness application and gives it to their lender along with any required documentation. At that point, the lender has 60 days to review it, make sure it's accurate, and then remit it to SBA. The SBA then has 90 days to review it and send the wire to the bank to forgive the loan. So the bank has 60 days, the SBA has 90 days. This process could take a little while. Let's talk about the two forms. The easy form is the first one we'll talk about. And a business is eligible to use this form if it meets any of the following three criteria. Number one, had no employees at the time it applied for the loan. Or number two, did not reduce its number of full-time equivalent employees, and it did not make a reduction of more than 25% to the pay of any employee. Or three, did not make a reduction of more than 25% to the pay of any employee, and it was unable to operate at the same level as it had on February 15, 2020 because of COVID-19 imposed federal mandates or restrictions. So if any one of those three comes into play, then it can use the easy form. The long form, this is considered the long form because there are additional worksheets that have to be completed. So borrowers must calculate, number one, the reduction in loan forgiveness amount due to reduction in number of full-time equivalent employees, and two, reduction in loan forgiveness due to reduction in salaries or wages. Okay, so let's cover that first one, the reduction in loan forgiveness amount, reduction in number of full-time equivalent employees. The amount of eligible loan forgiveness may be reduced if you have not maintained or rehired your employees, your number of full-time equivalent employees during the covered period. Okay, there's two safe harbors that we'll talk about here. The borrower is exempt if, in good faith, it's able to document that it was unable to operate between February 15th, 2020 and the end of the covered period at the same level of business activity as before February 15th, 2020 due to compliance with requirements or COVID-related, government mandates. The other safe harbor is the borrower is exempt if both of the following conditions are met. A, the borrower reduced its FTE employee levels in the period beginning February 15, 2020 and ending April 26, 2020, and B, the borrower then restored its full-time employee levels by no later than December 31st, 2020. So those are the two safe harbors. Now, we'll cover the second, reduction in loan forgiveness amount due to reduction in salaries or wages. So in addition to any reduction due to the number of FTE employees, loan forgiveness amount can be reduced if you reduced salary or wages of any employee by more than 25%. Okay, and there's an exemption here for this as well. If you had a reduction in salary wages for any employee during the period beginning February 15th and ending on April 26th, and you eliminated that reduction no later than December 31st, 2020, and there will not be a reduction in the amount of eligible forgiveness. So if you restore their pay level by December 31st, 20, you're going to be good here. Okay, let's get into the long form is a little bit more complicated because it has these worksheets and calculations. This is a link here I have available for you that you can click on at your leisure, and it leads you to a forgiveness guide that our compliance department has put together. It's a very, very good resource, and I think it will come in very handy if you find yourself in that situation where you need to use the long form. In terms of record retention, the SBA is saying that you need to keep the documentation related to your PPP loan, those payroll records, the utility invoices, and all of that. You need to keep that for 6 years. In terms of tax implications, ordinarily, loan forgiveness is considered taxable income, but forgiveness of a PPP loan is not going to be considered taxable income. All right, so that's really a high-level overview of the Paycheck Protection Program and how the forgiveness process works. I'm going to talk a little bit specifically about how the process works here at Union Bank. If you happen to get your PPP loan through UBT, we've created kind of a TurboTax-like experience for you. So you can log in to our portal. All your information will flood in, so you won't have to key in information that we already have. And again, it's kind of a TurboTax-like experience. It's going to invite you to answer a few questions, and based on how you answer those questions, it will determine whether the short form or the long form gets completed. And it's going to get completed in the background. And when you're done with the questionnaire, you will get another email with a DocuSign envelope, and the completed PDF application will be there for you to e-sign and return. So I've provided a link here to our website. I'm going to click on this, and you'll see here we've got the forgiveness guide that you can download. We have the forgiveness application guide, and that's just kind of a tutorial that walks you through how to use our system. And then the SBA forgiveness FAQs. So really anyone could use these FAQs, whether you got your PPP loan from Union Bank or not. I think these are going to be great resources for you. Let me get back to PowerPoint here. This link takes you to the U.S. Small Business Senate Committee on Small Business. There's some very detailed information on here from the Treasury and the SBA. And all of these links are live. And so all of the interim final rules that were ever put in place. So a lot of good information here as well. So with that, I do want to talk just briefly about some of the other SBA loan programs that continue to be available. SBA has announced that for anyone that has an existing SBA 7A loan or 504 loan, the government is making 6 principal and interest payments on your behalf. So if you have an SBA loan, your bank should have contacted you to let you know that the government's making those loan payments for a period of 6 months. Now, if you close on a new SBA loan and you fund that before September 27th, the SBA will make 6 months of loan payments on that new loan. So we're getting down to where it's kind of crunch time. It'd probably be pretty difficult unless you already had one that was in process to get it closed and funded by the 27th. We have a large number of loans that are in our pipeline, people that have started that process and want to take advantage of it. There's really 2 types of SBA loans. You've got the 7A government guaranteed loans. And again, that's where the government provides the bank with up to a 75% government guarantee. And then you have the SBA 504 loan program. And that's specific to owner-occupied buildings. So, for you guys, if you had a facility that you were interested in acquiring, maybe you're going to buy a competitor, and you need a loan to take on that debt to buy the building and land, or maybe you're adding on, you're going to put an expansion, maybe a new wing on. A 504 loan would be a great solution for you. The way the 504 loan works is you make application with the bank. The bank works in partnership with the Nebraska Economic Development Corporation, who in turn works and collaborates with the SBA. The bank is able to finance on an interim loan of up to 12 months, a loan up to 90% of the total project cost. So you put 10% in, the bank finances the other 90%. During that 12-month period, you make, if you're doing a new project, you draw on that as you need it, you complete your construction project, and then when you get your certificate of occupancy and you're ready to move in, then the bank works with NEDCO to complete what we call a closing condition letter. And at that point, then the SBA steps in and they take out 40% of the bank's 90% loan. And so the bank ends up with a 50% loan to value loan and first lien position, which is very safe and attractive for the bank. And then the SBA makes a 40% loan behind the bank, and that portion is a 20-year fixed rate. So that 40% loan, 20-year fixed rate. And the way this works is every bank that makes an SBA 504 loan statewide, there's a debenture that's sold to a group of investors. And whatever that debenture goes for dictates what the rate is on that 40% piece. Here recently, it's been as low as 2.21% fixed for 20 years on that. So incredibly low rates. 20-year fixed rates, the bank likes it because we're in first lien position. There are a few fees. It runs roughly 3 to 3.5% of that 40% portion, but allows you to come in with only 10% cash in, and lock into a long-term fixed rate, very low fixed rate on that 40% portion. So it's a really attractive option. There is a lot of red tape. It is a bit of an arduous process because there's a lot of documentation requirements, but the bank helps you through it. The Nebraska Economic Development Corporation is also a great help throughout that process. And in the end, it's worth it. Now that 40% portion, that loan that's direct with SBA, that has prepayment penalties on it. So it can't be repaid in the first 10 years without penalty. The bank portion, that 50% portion, can be prepaid. So I like it. I think, with the rates the way they are, even with the 3 to 3.5% fee, you're going to make up for it in the long run. So with that, I'm out of time. I'm going to open it up for questions, and I thank you for letting me be with you today. And thank you for all your work. I know that your industry has been affected greatly by COVID. I'm sure that the residents that live in your facilities are ready to see their families. They're ready to earn a well-deserved hug, I'm sure. So thank you very much.